Every empire believes it's different. Every generation thinks it's smarter than the last. But history always repeats itself. In 1929, Joseph Kennedy saw the signs. He sold everything 6 months before the crash and made a fortune while the world burned. In 2008, Michael Burry saw the same pattern and turned a small fund into hundreds of millions. And in 2025, it's happening again. The same euphoria, the same warnings ignored, the same 4 stages of collapse. This is not just a story about money. It's the story of human behavior repeating across centuries. Let's rewind history and see why collapse always follows the same path. It always begins with confidence, no, with arrogance. In the 1920s, America had just won World War I. Factories were booming, stocks were rising, and people truly believed they'd entered a new era of endless prosperity. Ordinary workers opened brokerage accounts. Banks offered margin loans so people could buy stocks with borrowed money. It felt like free money, a system that could never fail. Magazines printed stories about teenage stock traders becoming millionaires overnight. People took second mortgages to buy shares in companies they didn't even understand. And the phrase, "everyone's getting rich," became the new American dream. Fast forward to 2006. A new kind of euphoria had taken over. The housing market. Banks, brokers, and everyday investors all believed that home prices would rise forever. Real estate never crashes, they said. People flipped houses like trading cards. Loans were given without income verification, and Wall Street bundled this madness into something they called mortgage-backed securities. Even the rating agencies, supposed to protect investors, labeled junk as safe. And now, in 2025, the euphoria is digital. Tech valuations skyrocket. Artificial intelligence companies raise billions overnight. Governments print money at record speed to stimulate growth. People trade crypto coins, meme stocks, and speculative assets as if risk doesn't exist. History's first stage always looks the same. Confidence turns to greed. Greed turns to blindness, and blindness builds the foundation of collapse. The cracks never appear suddenly. They start small, whispers in the noise. In 1928, interest rates quietly started rising. Factories were overproducing goods people couldn't afford. Debt piled up. But Wall Street ignored the warnings. The party was too good to stop. Newspapers dismissed doubters as pessimists. When a few banks began to fail, investors said, "It's temporary." But it wasn't. In 2007, the first crack came from a small fund. Bear Stearns hedge funds imploded due to subprime mortgage losses. Wall Street laughed it off. The Federal Reserve said the damage was contained. But within months, the entire housing market began to rot from the inside. Homeowners defaulted. Banks realized their assets were worthless. And confidence, the glue of the system, began to disappear. Now in 2025, we're seeing the same signs again. The cracks are not in housing this time. They're in sovereign debt. Governments owe more than they can ever repay. Interest payments have exploded. Central banks are trapped. If they cut rates, inflation rises. If they raise rates, the debt implodes. Bond markets are shaking. Foreign investors are pulling back. And behind the scenes, liquidity is drying up. Every crash begins with small tremors. And the smarter ones, they're already listening. Then comes the fall. It never announces itself. It arrives overnight, silent, brutal, unstoppable. In October 1929, the market opened like any other day. But by afternoon, panic spread. Traders dumped everything. Within days, billions in wealth vanished. Crowds gathered outside the New York Stock Exchange. Faces pale, lives shattered. Banks failed. Unemployment soared. The Great Depression had begun. That was the cost of ignoring the cracks. Fast forward to 2008. Lehman Brothers collapses. The 4th largest investment bank in America. Global markets freeze. ATMs stop working in some countries. Within weeks, governments around the world rush to bail out their banks. It's not capitalism anymore. It's survival. And again, the ordinary person pays the price. Homes lost, jobs gone, futures erased. And now the 2025 collapse isn't about mortgages or .com stocks. It's about trust. The last pillar of the system. When people stop believing in the value of money, when confidence in government debt vanishes, everything else falls with it. Inflation eats away at savings. Currencies lose credibility. Investors flee to gold, real assets, and anything that can't be printed. The collapse isn't coming. It's already unfolding, quietly, in the data most people ignore. History always moves slowly, then all at once. This is the stage no one talks about, the transfer, because collapse doesn't destroy wealth, it only moves it. From the uninformed to the informed, from the emotional to the patient. In the early 1930s, when everyone was selling, the Kennedys were buying. Land, companies, infrastructure, all at pennies on the dollar. By the time the recovery began, their fortune had multiplied. In 2009, when the world was in chaos, Warren Buffett and other long-term investors quietly bought into the wreckage. They purchased what panic had discounted. Within a decade, those investments returned hundreds of billions. And now, in 2025, that transfer is happening again. While retail investors chase short-term hype, the wealthy are buying physical assets, farmland, commodities, energy, and gold. They know that real wealth isn't measured in dollars. It's measured in ownership. The new winners aren't those who make fast money, but those who survive the storm, because the end of every cycle is the beginning of the next. After every collapse comes renewal. After destruction, creation. When the old order dies, a new one is born. After 1929 came regulation and rebuilding. After 2008 came fintech, digital banking, and new markets. And after 2025 we'll likely see something even bigger, a shift in global power. The dollar's dominance may fade. New financial systems will rise, backed by technology, gold, or even energy. Empires end not in fire, but in transformation. The question is not if the world changes, but who adapts fast enough to lead the next chapter. The 4 stages of collapse, euphoria, cracks, collapse, and transfer, aren't just financial cycles. They're reflections of human psychology. Every generation repeats them, convinced they've outsmarted history. But history never forgets. It waits patiently, and then it rhymes again. In 1929, it was stocks. In 2008, it was housing. In 2025, it's debt, currency, and trust itself. The only question left is, which side of history will you be on? The side that loses everything, or the side that saw it coming? Human behavior is at the core of every financial rise and collapse, repeating through generations as if history itself were caught in an endless loop. The markets may evolve, currencies may change, and technology may advance, but the emotions that drive human decisions remain exactly the same. Every boom begins with optimism and ambition, emotions that soon evolve into greed and overconfidence. People begin to believe that they have mastered risk, that they have finally discovered a system immune to failure. This belief becomes the seed of destruction, because once human beings start to believe that growth is permanent, they ignore logic and silence anyone who warns them otherwise. The same collective psychology that builds civilizations also blinds them to their own limits. Investors, politicians, and ordinary citizens all start feeding the same illusion that prosperity is endless. They justify every bubble as progress, every debt as innovation, and every risk as opportunity. This pattern can be seen in every major collapse across history. In the 1920s, ordinary Americans poured their savings into stocks because everyone else was doing it. It was not about analysis, it was about belonging to the crowd. In 2008, homebuyers borrowed money they could not repay because they saw their neighbors getting rich from houses. In 2025, the pattern repeats again in digital markets, debt-driven economies, and speculative investments dressed in new technology. What changes are the tools, not the psychology. Human nature remains addicted to the feeling of easy wealth, to the belief that this time is different. The fear of missing out is stronger than the fear of loss, and that imbalance fuels every speculative frenzy until it implodes. Greed is only one side of this behavioral cycle. Denial follows quickly after the first cracks appear. People refuse to accept the possibility of collapse, because admitting it means confronting the fact that their judgment, their leaders, and their systems might be wrong. They look for excuses, believing temporary setbacks are just market corrections or media exaggerations. This collective denial delays necessary action, allowing small problems to become systemic failures. When the truth finally becomes unavoidable, panic replaces denial. Investors rush to sell, governments scramble to reassure the public, and chaos spreads faster than reason. The same people who once said the market could never fall now insist that the system will never recover. Fear overtakes greed, but it is the same emotion wearing a different mask. And after the dust settles, When the collapse is complete, human behavior begins the next cycle. The survivors rebuild, claiming to have learned from the past. But as new generations rise, the lessons fade. Optimism returns, followed by risk-taking, followed by another illusion of invincibility. The pattern begins again, not because of economics, but because human emotion never evolves as fast as technology. The market is merely a mirror reflecting human nature, and as long as greed and fear define that nature, every boom will carry within it the seeds of its own collapse. Each major financial collapse, whether in 1929, 2008, or 2025, follows the same four predictable stages that repeat with mechanical precision. It begins with euphoria, a phase where optimism turns into collective delusion. In this stage, markets rise beyond reason, fueled by the belief that growth is permanent and that human ingenuity has conquered risk. In the 1920s, it was the stock market mania, with investors borrowing money to buy shares that had no connection to their real value. In 2008, the same excitement surrounded housing, as people bought multiple homes believing prices could only go up. In the modern era, the euphoria revolves around technology, digital assets, and speculative debt instruments, once again proving that the form of the bubble changes, but the psychology behind it never does. The euphoria phase blinds investors, politicians, and the media to reality, creating an environment where caution is mocked and risk is rewarded. After euphoria comes the stage of cracks, when the first signs of weakness begin to appear beneath the surface. These cracks are always visible to those who look closely, but few choose to acknowledge them. In 1929, it was margin debt and excessive speculation. In 2007, it was subprime mortgages and unsustainable lending practices. In 2025, it is record levels of global debt, rising interest costs, and central banks trapped between inflation and insolvency. The cracks start small, but they spread quickly because systems built on leverage are fragile by design. Yet the majority of people remain in denial, dismissing early warnings as temporary corrections or baseless fear. This blindness allows the cracks to expand until the entire structure begins to shake. The third stage is collapse, the point at which the illusion of stability evaporates in a single moment. Confidence, once abundant, disappears overnight. The panic began with one bad day on Wall Street and spread across the world like wildfire. In 2008, the collapse of Lehman Brothers triggered a global financial meltdown, freezing credit markets and erasing trillions in wealth. In 2025, the collapse is driven by loss of trust in governments and currencies themselves. It is not a single institution failing, but the entire financial framework showing its fragility. People rush to liquidate assets, markets freeze, and fear dominates every decision. The collapse is not random. It is the logical outcome of years of excess built during the euphoria phase. The final stage is the transfer of wealth, the quiet period when panic subsides and opportunity shifts hands. Those who prepared, who understood the pattern, begin buying what others are forced to sell. In every collapse, wealth is never destroyed. It merely changes ownership. After 1929, the Kennedys accumulated assets at bargain prices. After 2008, long-term investors like Buffett and Burry did the same. In 2025, the pattern repeats again as capital flows from paper assets to tangible ones like gold, commodities, and real estate. The four stages complete their cycle, and the system resets, waiting for human nature to forget the lessons once more. The illusion of endless growth has always been the greatest lie societies tell themselves before every collapse. It begins innocently, with genuine innovation and progress, but slowly turns into overconfidence and blindness. When economies grow for too long without interruption, people start to believe that prosperity is permanent, that human intelligence has outsmarted the natural limits of finance. In the 1920s, industrial expansion and new technology convinced Americans that nothing could go wrong. Newspapers celebrated record stock prices, and policymakers promised a future of eternal stability. The same mindset reappeared before 2008, when complex financial engineering made investors believe that risk could be eliminated through mathematics. Credit default swaps, derivatives, and mortgage-backed securities created an illusion of safety while hiding catastrophic exposure underneath. The more complex the system became, the more people trusted it, thinking that complexity equaled control. But in truth, it was a fragile tower built on human arrogance. In 2025, the same blindness manifests in a new form. Technology, artificial intelligence, and digital finance have given society another illusion of control. Algorithms predict markets, central banks manipulate interest rates, and politicians assure the public that money printing can continue indefinitely without consequence. The idea that governments can create prosperity out of thin air has become the new religion of economics. Debt is no longer seen as a danger but as a tool of growth, and deficits are justified in the name of progress. This collective belief that we can expand forever without limits blinds society to the growing cracks beneath the surface. Rising inflation, declining productivity, and the erosion of trust in currency itself. The illusion persists because people want to believe it. Admitting that growth has limits means accepting that pain and correction are inevitable, and human nature resists that truth until it's too late. The blindness of societies is not ignorance, it is willful denial. When profits are high, no one wants to stop the music. Economists who warn about danger are labeled pessimists. Media celebrates billionaires and market records while ignoring the structural weaknesses hidden behind them. In 1929, it was the celebration of stock speculators. In 2008, it was the glorification of house flippers and Wall Street traders. In 2025, it is the obsession with digital wealth, tech valuations, and government promises. Everyone participates in the illusion because it benefits them in the short term, even if it destroys them in the long run. The cycle feeds itself through greed and pride until the system can no longer sustain its own weight. The collapse that follows always exposes what people refuse to see: the debts that can't be paid, the assets that were overvalued, and the promises that were lies. The illusion of endless growth shatters overnight, and what seemed unbreakable reveals itself as hollow. Every generation thinks they are living in a new era, immune to the mistakes of the past. But the truth never changes. Progress without discipline becomes self-destruction, and every time humanity forgets that, history reminds them in the harshest possible way.